Okay. Good morning, everyone. I'm Vince Lancy. This is the market rundown, the morning market rundown. We're going to talk about gold and oil, not a very inspirational title. I'll come up with something later on, perhaps tied to Goldman's mystery buyer update. We're also going to do a little chronological review of how we got to this point, at least in terms of China's buying, because this is about China, as usual. And we have a quick comment to make about Trump's executive order regarding oil and gasoline, natural gas too, I should say. Let's start with the markets first. The dollar is down 15. 10-year yields are 456, unchanged. The SP 500 is 60.79, up 23. The VIX is 1483, down 22. Gold is up another 13 and a half bucks, 27.58. Silver 30.76, unchanged. Copper is 428, down 2. When you start to see gold rally and silver get left behind in this era, think nervousness. Think people selling silver so they can buy gold. Think macro discretionary getting long gold. Think if this continues, gold has one of those silver has one of those 6% catapult days. Incidentally, my position, I took off my gold short, so I'm just long silver and flat gold. And I'll reveal why in the premium section of this today. All right, moving on. WTI 76.88, down 12. Natural gas 374, down 6. Bitcoin 105 and change, down 872. Palladium 966. Platinum 948, up 4 and change, up 2 and change respectively. Gold, silver, firm, still under 90, but firm. Soybeans 1058. Corn 480. Wheat 560, down 6, down 1, up 1 and change. Korean barbecue, however, due to mercantile risks, has gone up in price. We have to import some of those things, you know. That's an inside joke. Okay. Homepage. There it is. Tariff reality check. Weaker U.S. dollar on deck. Mali seizes 3 tons of Barrick gold as tensions escalate. It's like a poster for mercantilism. Can't even get away from the word anymore. All right. No, that's not where I wanted to start. That's more like it. Goldman's mystery buyer update. The mystery buyer is not a mystery. It's China. The question is, who else is buying? Let's read a little bit here. While we know much of this from our previous coverage of Goldman's reports, why bring it up again now to their institutional clients? Again, a little bit of English problem there. The buying has been, as we have opined in this space and now firmly believe, China's OTC macro discretionary whale trading OTC during COMEX hours. All right. That will make more sense in context. Let's start with the chart. This is a chart that Goldman has been using for probably the last 6 months. When we first saw it, it was before they were coming out with their 3,000 target for 25, probably in like October, and they were trying to handicap using their new model. Remember the new model? They were trying to handicap future physical demand, and they were quite accurate in saying that gold is no longer measured by macro dollar, stuff only. It's measured by physical demand, as in they want the gold. And China had stopped buying publicly, and they created this chart. And you can take a look at it and you can see what they're going on there about. But they had this dotted line on the right, and the dotted line was they were expecting a decrease in physical demand because China had stopped, right? Publicly buying. And so they were saying less physical demand going forward, but still a lot more than in, say, 22 or 21. And they were betting on the price to get to 3,000 because of financial interest in the West. And it makes a lot of sense. However, the financial interest, as we had warned people, is very fickle. The dollar gets strong, Americans stop buying, they go and they, buy something else or they sell. But then I'll say December, they noticed, or Goldman noticed that China, when they came back publicly buying in, I think, November or December, they had already been buying privately in the over-the-counter market, and they disclosed that. And after 2 months of that buying being more than what they anticipated it to be, they've readjusted their 6 month moving average. That's their GS forecast. That's the red dotted line. So the dotted lines are showing what the light blue line should extrapolate out to. However, uh, it's looking more like a fishhook, meaning this was a pause in the buying. This was when China was not buying, at least publicly. And then the end here, they were buying privately, and now they're buying publicly. Anyway, the moral of the story is Goldman Sachs updated very recently their estimate on how much China is going to buy. Now, I'm going to get into in later on at the bottom here why I think this is even low. But what you want to look at here is the blue line, right? The blue line is China announced buying. I'm sorry. Uh, I'm sorry. Combined buying, announced and unannounced. And so here's the peak in 23, and here it is in this area here, and then it just slops off when the BRICS and the election comes. They stop buying publicly, and that's because other countries were buying, and here they are buying it. It's their turn to buy. So there's more of a cyclicality to this than a decreasing slope. Anyway, the update is they're buying now. Here. In essence, China's all right. Here's what's not being said, and we're saying again, having been right last year on this. Uh, what's not being said is that there are three cohorts of buying coming out of China. There's the PBOC, that's your official, we're buying gold, and they tell you, and they're transparent about it. Then there's the other entities that function on behalf of the government, buying privately, OTC. That would be the Army, SAFE, and other entities. Now, there's a third entity, which there's an overlap in all three of these entities, right? They're all CCP related. And that third entity is what we call the China whale or the China Hunt brother. And we've written about him about 6 months ago. And this is a macro discretionary fund or funds operating out of China that took on JP Morgan. And that fund basically started getting very aggressive in March of last year, and the market rallied in March of last year. Anyway, there is a pecking order in how China buys. PBOC, I'm sorry, quiet buying, PBOC, and the macro discretionary, and it works its way up along with the market. And we might be entering a phase like that again. So that's the unofficial buyer. Now, you can click on that link there, and it'll take you to that story about that, about the China whale or the China hump brother. In essence, China's official buying, back to the quote here. In essence, China's official buying has another unofficial buyer, Asian-based funds with the green light to buy alongside the PBOC. This usually happens when a serious play is coming. This is our opinion here, perhaps geopolitical, perhaps stimulus, perhaps both. Now, this is not something I'm pulling out of my ass. For 15 years at night, you would see lead and copper and gold and silver a little bit rally. And the next day, there would be an easing in monetary policy or a stimulus or a geopolitical comment that would come out. So the banks are permitted, if not encouraged, to front run policy when it comes out, especially if they're done buying at the PBOC level. Anyway, just keep that in mind. We'll talk about that more in premium. Moral of the story, China's in the market again in a very, very big way. And I think the banks are going to get screwed again. So the banks are going to get screwed because they're playing as market makers again. We're going to talk about options volatility as well. All right, executive order. One of Donald Trump's executive orders, President Trump, I should say, is called Unleashing American Energy. I'm going to give you this. There's a lot of, it's everything that we want, okay? But it's not going to be discussed anywhere in the mainstream media. at all because it's everything they don't want, right? It's going to be discussed in detail on places like Alex Jones and Zero Hedge. We just want to give you a summary and where to look for what you want to see. So, summary: no more Green New Deal. It's over. Less rules prohibiting internal combustion engines. So remember the old CAFE standards? They're not going to prevent you from driving them. Less bureaucracy for prohibiting oil and gas development. You don't need to check with 15 little mafia godfathers and get permission, woke godfathers, before you drill. No more subsidies for green projects. So we're not going to pay for or subsidize the guy developing the electric charger. More oil drilling, more refineries, and more mining. Now, the more refineries thing and the more mining thing, that's actually key and not something, not really, I kind of slept on that, but they're going to alleviate the pressures environmentally that prohibit mines from being drilled, that prohibit new refineries. So the bottom line from all these things together, if you're looking at it from a stock or economic point of view, the changes unleash both demand and supply simultaneously, which should translate to growth. And we have some more details in the footnote on that. We have some quotes from the report. All right. Oh, I know what I wanted to show. Give you a little chronological, a little in, oh boy, when was this? Pardon me. In January of 23, we identified the mystery gold buyer as China. And it was based on study of their market structure and how they did things. And then this is January of 23. The point of this, other than patting ourselves on the back, is it's 18 months later and the press isn't talking about it. And you only know that the banks are talking about it because of people like us that are sharing information that we get and translating it for you. So, January of 23, China is the mystery gold buyer. There's the story on Zero Hedge. They were kind enough to host it for us, right? The FT in March of 24. Who is gold's mystery buyer? That's the FT, right? This is the premier financial newspaper in England. Who are they? 12 months ago, we identified them. Now, nobody knows who we are, but they certainly know who Zero Hedge is. So they definitely have read it on Zero Hedge. Okay, June of 24, China's missing gold reserves. A Singapore-based newspaper was trying to figure out the math on a respected journalist was trying to figure out where the missing gold reserves were, and we described where they were. Goldman in September of 24, as they're putting out their 25 gold report, shares the gold secret. And the gold secret is that buyer is China. They're pretty sure of it, although they can't say it. They pretty much say it without saying it. They were discreet about it. And then in October of 24, when you do the math on all the gold that's being mined in the world versus all the gold that's being bought, so it's kind of like this amount of gold is being mined, this amount of gold is being created from scrap, and this amount of gold is bought. And there was a short in there. So Ross Norman had actually commented on it once, and then he never commented on it again. I can imagine why. But there was a shortfall. There are 882 tons of gold unaccounted for that nobody's talking about. And we covered that in detail. And I think we did some math on it too. We hate doing math. We used to do that all the time. Well, it's in there somewhere. We have a grid that we used. There's probably more than one. All right. Next. China is the secret gold buyer, confirmed November of 24, right? Who confirmed this? I think it was I forget. It might have been Jan, right? Writing for Monetary Metals, in whatever, like last week or last month, and now here we are, January 20th of 25, and Goldman refers to a report on their trading desk for their institutional clients, and that's what I just revealed a chart from for you. So GS Trader 1 infers it's the China whale buying again. Anyway, so it's 18 months of this. So you're never going to be told the truth. Never. All right. So get the information from where you can get it and act accordingly. Don't be short gold. Goldfix News and Analysis, private walkthrough of the BOA Silver Report. That's me walking through the actual report so you can see. Basically, it's more how you read it if you ever see those reports as opposed to what the content is. Trump tariff trades spark turmoil in global gold market. That's a story that we covered that was out there in the mainstream media that we uh, did a coverage of. Daily and weekly indicators for the U.S. economy, an overview of Trump's day one executive actions. That's a zero hedge story. Really good summary of basically all the executive orders and what he did. The dollar is still overbought. Well, the dollar is still overbought. Still has a ways to go. Tariff reality check, weaker U.S. dollar on deck with higher gold and silver prices. That's my take on well, if he can't get the tariffs done that he wants to get done, he's going to have to weaken the dollar. And there's another report from HeartNet, which confirms the weekend report that we sent out to the founders. Okay, moving on. Data on deck, again, light week, U.S. leading economic indicators. Let's take a look at the chart before I move on to the premium, the charts, I should say. We're going to hide the gold volatility for now. All right, so I'll give you some levels here. Let's start with gold. All right. We had a conversation with Trader Sumo, and we walked away from that saying gold would make a new high, not new all-time high, but gold would be higher Monday night and for the week. And so that was based on one of Sumo's trend tools. So I'm familiar with it enough. I'm going to be using it more, and I'll be referring to it when it's relevant for us. Anyway, gold's. I don't want to jinx it. Okay. Gold should make a new all-time high. Today, no, but it's going to. We're not out of the bigger range, high to low, but we're out of the smaller range. This is where someone said you shall not pass twice for good reason. And I'll tell you what that good reason was. Whoever sold it here was a buyer in here. They sold 500 contracts very loud and very obnoxiously. And then they bought 5,000 contracts very quietly and very stealthily. And now, they've decided that they're not going to stop it anymore. So they bought enough down there, which means a new high should not be crazy. We've talked about this from the 4-hour chart going back, the moving average, the 100-day moving average. This was it. This was China buying confirmed. They said they bought in this month. They said they bought it this month. The 100-day moving average didn't get below, right? And now it's like the 100-day moving average. Kiss it goodbye. We're done. We don't care about the 100-day moving average. We're not trying to regress it back to it. We're just going to let it start to run. Coincidentally, who just started getting short again? The bullion banks, because they were let out of timeout because of the new year, and now they're short again, and there's a good chance they could get running. So gold, new all-time highs is definitely on the radar. Silver might lag again, I mean, as evidence from the position that I had on that I had to take a leg off of. Silver might lag in, but I believe you're going to end with one of those 6% silver up days. Then you would have to ask yourself, is this the end of the whole thing? Or is this the beginning of the next leg higher? Will they start to take turns? But here we are. The 100-day moving average is where everyone who wants to sell silver is selling it. And when it gets above that, some are selling it because it's the 100-day moving average. Some are selling because they're buying gold. Some are selling because it's not above this high of the last week. Some are selling because of this congestion. But when it gets above this and settles above it, 31.92 should be your first stop in quick order. Okay. Proof. Copper, right? This copper has done what silver's doing, right? So copper, 100-day moving average, got above it, boom. So you get one of these. The question is, will silver get that pullback? We don't know. All right, so gold's up 14 and change. Silver is up 6. Oil is Oil's going to be hard to understand if you're looking for a trend. Might be a good trade though. That's it. I'm Vince. Have a great day and stay with us for premium. All right. Where is my thing here? Okay. This is going to be